Hello and welcome to the Smart Divorce Podcast. Delighted to be joined today by Kathryn Knowles from Cura Insurance. So Kathryn founded Cura Financial Services, which is an insurance broker, and Advice for Advisors, which it trains advisors in protection insurance. And she'll be a whiz at this because Kathryn also has her own podcast.
Fingers crossed.
It'll all go well. Thank you for joining me today, Kathryn. It's a real pleasure to have you with us.
Thank
And
you for having me.
you've got someone on your lap today as well.
I do. I have a little fudgy woo. For some reason, he's fudge, but obviously I call him fudgy woo, so fudgy woo, anything like that. He's just wanting cuddles today, which is fine by me. I'm quite happy. The children are out, so he's my hot water bottle instead of my 5-year-old, so that's good.
Awesome, that's fabulous. If you are listening to us on the audio on the podcast recording, you won't be able to see him, so you might want to just nip onto YouTube and have a look because he is the cutest thing ever. Bless him.
He's not doing videos there. I tried to take a picture of him earlier, and he was just not.
He's not having it. He's not having it.
Not having it. I'm for it though. It's just like you, then that's fine.
Fair enough. Fair enough. So today we're going to talk about financial protection. So do you want to start us off by giving us a little bit of information about what it means, what it is?
Yeah, no, absolutely. So there's three sort of really key areas when we're talking about stuff like protection insurance. So I am a protection insurance advisor. And I mean, there are lots of different insurances that all do very valuable things, but I'm just going to stick to the ones that I generally do, which are things known as life insurance, critical illness cover, and income protection. So life insurance is pretty much what we think it is. It's there if you were to die, it's going to pay out some money to your loved ones to help them cope with the fact that you're not going to be there financially and supporting them. There's lots of different things that come into advising on this and lots of different ways to set it up. And there's multiple types of life insurance style policies. But that's sort of like a very basic kind of initial rundown of what that is. With the critical illness cover side of things, that's different. So that's all about you being diagnosed with a critical illness that is insured and covered by the insurer that you're with, and often at like a specified severity as well. So on average, we would say something like 60 conditions are covered. And generally, with critical illness cover, it's going to cover things like cancer, heart attack, stroke, multiple sclerosis. It often covers quite a few neurological conditions like Parkinson's and things like that. And again, that will pay out a cash lump sum if you are diagnosed with a condition that meets the criteria of the insurer. And that's there to kind of help you in a lot of different types of situations. So it could be that I don't know, maybe you need to adapt your home due to something that's happened to your health. So it might be going towards that, helping you fund that. It could be that you maybe don't have private medical insurance and you're actually going to use some of the funds towards getting some support, private medical insurance, or there's quite a few different things that stand out for me as well. I know somebody quite well, and she had breast cancer. And I didn't realize how apparently afterwards you have to get really specific bras, and they are incredibly expensive. And so it's stuff like that, basically. Once you get the payouts, you can then do what's right for you in terms of your situation. We then have income protection, which is an area that I absolutely adore. And that is a policy that will pay out a monthly income to you. If you are ill, for whatever reason, you are ill and unable to work, it will pay out some income to you every single month to make sure that ideally that you can at least keep up with mortgage repayments and your bills, hopefully even a bit more than that as well, just to make sure that you're going to be safe and secure going forward.
Yeah, absolutely. I'm with you. I love income protection as well, which seems like a very peculiar thing to say, and our listeners will be like, these two are obviously completely crackers. But I'm with you. On the critical illness cover, I had a client a few years ago who had suffered a critical illness when she was a few years younger, and she had critical illness cover, thank goodness, and she'd actually used the money because she wasn't sure how long she was going to be around, but she was well enough to travel. She'd used the money to go off on a world cruise.
That's one of these examples I give to people actually, and I'll say to them, because people often say to me, advisors, what can I do with this? I was just like, well, once you've got the money, it's up to you, in a sense. If you wanted to go on a world cruise, instead of paying off a mortgage or doing XYZ, go enjoy yourself. You know, it's completely up to you what you do with it. It's just there to give you that bit of comfort, because the last thing you want, if you've been diagnosed with a condition that is at the level that you're going to get that payout, the last thing you want is to have financial worries behind you. So a lot of people use it for things like paying off a mortgage, because then they just go, you know what, at least I don't have to worry about that. The home's safe. It's my home. No one's going to touch it. No one's going to take it. And that's just going to put me in a headspace where I really feel like I can tackle whatever's going on health-wise right now. Yeah. But whatever suits you. And what's quite interesting as well, and we've come across it quite a few times at my company, is people who have critical illness cover and I've actually had a critical illness, but feel for whatever reason, I've just felt, I don't think it's been bad enough to be able to claim on it. So there's quite a few people where they've been coming to us for advice, and we're saying, well, have you checked? And we've actually ended up, even people being diagnosed a few years before with something, are getting their payments through. So if you do have anything like that, and you've had any conditions diagnosed, do just make sure to pull out the documents and see if it is something, and there's no hardship in asking.
Absolutely, you don't lose anything at all by asking the question, do you?
Absolutely.
I suppose that in an ideal world, if these types of cover were all free, we'd have as much as we possibly could, Absolutely. As much as the insurance company would underwrite us for.
Yeah.
But obviously there are costs associated with them. Can you just talk us through kind of the different insurances and the kind of, I know you can't give a specific cost because it's individual and it depends on your state of health and your age and where you live and all sorts of other things, but broadly speaking, how do they progress these types of insurance in terms of cost?
Yeah, so a lot of the time what we would be doing, especially with things like life insurance and critical illness cover, the premiums are often what are classed as guaranteed. So if you set the policy up 10 years ago, with most insurers in the UK, they will still be that premium. Now, we kind of lock it in place at that point. And if you have had a change of health, that's not going to, with most insurers, it's not going to affect that price. It's not going to affect the eligibility, because it's all done. I always say to people, it's the snapshot of when that policy starts.
Yeah.
So on the day that policy starts, the insurer is saying, this is you, this is your life, this is what it's looking at. So this is the price that we're going to charge you for the next, 30, 40 years. That's if you want to keep the policy that long. And the same, you're going the other way as well. So you're saying, you're looking at that insurer on that day going, right, I'm looking at your terms and conditions. This is what you offer. I'm agreeing to sign up to that. If I want it for all this time, fair enough. But if I want to cancel it in 10 years' time, that's like my to do so. I would always say that's a good idea to get advice before cancelling things like insurances. But in terms of pricing, it's, as you say, it's completely dependent upon age, the amount of cover that you're wanting, why you're wanting it, your smoker status, things like this. Still got things like BMI, health conditions. Not all health conditions are going to influence the premium. With the life insurance, you're more likely to have a premium increase if there was going to be anything happen to it than say something like an exclusion. And with critical illness cover, you kind of a little bit hit and miss. It can be an exclusion, it can sometimes be a price increase. But generally what I say to people is that a lot of people are quite interested in things like critical illness cover and income protection, but it is more expensive than life insurance, because I use this example in some training that I do. So I'm 37 and I say to people, I get them to guess, so I'm like, what's the likelihood of me dying now at age 37 and we're not expecting, in a sense, for me to die? And the risk is about 5%. Now, when we go to being diagnosed with a critical illness, and what's really interesting about this is the fact that, critical illnesses they're being diagnosed quite regularly, quite a lot. And we hear about cancers all the time and strokes and heart attacks, but the risk of me having a critical illness at this moment is 14%. Now, the risk of me not being able to work for a period of 2 months or more due to ill health is actually 50%. So the risks are actually far more in the critical illness, and especially the income protection space, which is why they are more expensive. But general rule of thumb, I say to people, whatever price you've seen for life insurance, expect it to be somewhere between 3 to 5 times more expensive when you're looking at critical illness cover, when you're looking at income protection, because it is more expensive. And the reason being is that it is so much more likely that you're going to be claiming on it. But life insurance itself, again, it does come down to age and things like that, but we can see life insurance from as little as £5 a month. It can easily go up to much higher than that based upon the individual circumstances and ultimately the amount of cover that you want. If you're wanting £100,000 worth of cover, versus 1 million, then that's very different. And there's lots of different ones as well. So you can have ones that last like 20 years, or you can have ones that last the whole of your life, which are definitely more expensive because they will just keep going until you pass away. There's not like an end date. And then you have something as well known as family income benefit, which is quite an interesting one. And that might be something that we're coming on to in a little bit, I think, that probably explain a little bit more in terms of some of the aspects of if somebody is getting divorced.
Absolutely. Just to nip back at it and just explain a word that you used a few minutes ago.
Okay.
So you talked about exclusions. What does that mean?
So with exclusions, we can get exclusions on these protection policies. So I said life insurance, we don't generally get that, but it is really important as well. And if you are somebody who is going through a divorce and you're finding you in a position of having to take out life insurance now, I'm not suggesting that you would be in an area where this would possibly be a concern, but it is just important to know that the majority of life insurances in the UK come with an initial 12-month suicide exclusion. So you might hear exclusion, but it's usually just that 12-month suicide exclusion at the start. It's very unusual to get life insurance with other exclusions. With critical illness cover, that can be quite different. So if you are somebody who's maybe had breast cancer in the past, it could be that you have a breast cancer exclusion on the policy. And it's really important to watch out and to look for this because some might actually just put on a blanket cancer exclusion. So make sure it's finding one that really matches you best and is going to give you the best quality contract. And with income protection, that can sometimes be a free fall in terms of exclusions, I have to say. It can really be, and there's different, it doesn't help that there's really different types of insurers working in the market, and there's so many ways to access it. And it might be that with one insurer that you can't have the cover because you've got a couple of things that mean that they can't offer, but then another one, absolutely, they could just take you on without any concerns whatsoever. So a good example of that, though, where we might get exclusions, are things like mental health. So especially in income protection, two areas that they mainly people claim on are mental health and back pain. So if you've had either of those, then it's quite often that you would probably see an exclusion on there. And I'm not going to go into massive complexity, but that's we're talking at the moment is if we're arranging it personally. So just ourselves, for ourselves. There are completely different options if you happen to have a company, and we can maybe look at options that can be arranged through a company. But I'm sure that will take far much longer than the time that we have in terms of the podcast, so I won't go into that complexity.
Okay, so let's say we're getting divorced, because that's the people who are going to be listening to us today are likely to be either going through divorce or kind of considering the implications of that happening. So we would suggest that they review any financial protection that they have in place. Not necessarily do anything immediately, but once the divorce is done, then obviously this is an important area to review. So what are we going to be looking at?
So the key things you really want to look at and to consider is if there are insurances in place, make sure you know about them, because it's been quite typical that in the past, and I'm not again wanting to stereotype or anything, but it's been quite typical that men have been the ones that have set up a lot of the financial side of things. I think that's massively changing now. I have to say, I'm for me, I have completely equal amounts of men and women that I speak to. And similarly as well, if the woman has generally been the one sorting it out, the other person, they really need to know what has been arranged. We tend to sometimes find that people who are the main breadwinners, they're often insured for more. But it's really important to know and to make sure that it's not just the breadwinner that's insured, because whoever isn't earning as much, they are also very, very relevant to the couple and do need their own insurances. But things to look out for is with these insurances, do they have something on the life insurance and critical illness, which can be what's considered as joint, so two people can have and share a plan. Is there anything known as a separation clause? So separation clause is something where you can contact the insurer and just say, look, we're divorcing, they want theirs, I want mine, can you just sort that out for us? And the insurer will step in and do that. There's quite a lot of policies though that don't have separation clauses in them, and that's where things can start to get a little bit tricky. Because it can be quite difficult then to make sure to sort of like change it so that you do both have your individual policy. And it might be that somebody turns around and thinks, well, you know what, just let them have it. I'll just take my name off it, and it can just become their own policy, and I'll just set up my own, which can be potentially okay. But bear in mind that when you go to set up your new policy, you are older, so the pricing is probably going to be higher. Not necessarily silly amounts, but it will comparatively be higher. If you've had any health changes, that could potentially really influence the price as well. So you might need to have a really sensible discussion between the two of you as to actually, if one of you is going to keep it, which one is it fairer in a sense to keep? If one of you can just go out and get a new policy and it's what's known as the basic standard premiums, and the other one's going to have difficulty, then maybe just work sensibly together so that that person can obviously keep that policy in place. Things like income protection is all based upon yourself as an individual, so that should just carry on. Some of the things that we've come across though are people where they've potentially kept the insurance in place and maybe even kept paying for the insurance for their ex-partner because they've maybe got children or there's different situations, because then what they've thought is, well, if I keep paying for it, then if something does happen to them, I'm going to get that money to help me raise the children. And that can be potentially a good argument to have. We've also had it before with people who are going through a divorce who've come to us and said, actually, as part of my divorce stipulation, I have to put life insurance in place until my children are of a certain age. So it's definitely things to be aware of. There's so many ways to turn it up. And very quickly, going on to the family income benefits, it's a beautiful policy. It's incredibly confusing that it's called income benefit because it's a life insurance policy. But essentially what you do is you insure a certain amount of money each year to be paid to you, either as like an annual lump sum, but usually like a monthly amount. So that would be a case of, right, I don't know, we've got 2 children and we feel that it's going to cost at least £20,000 a year to sort of keep them in their current sort of like ability to do all their sports they want to do, or maybe be at the schools that they want to be at and maintain a standard of living. So that's going to cost me at least 20,000. So what we're going to do is insure this person over here, ex-partner, for £20,000 every year until the children are age 18. And then that means that if they do pass away, that you're going to receive that money every year until the children are independent. And it's just an extra little version of trying to get you some support.
Yeah, it tends to be a little bit cheaper as well, doesn't it? Family income benefit.
It depends. It can be, but then it depends. It's kind of going a little bit towards financial advice with this one in some ways, because it's kind of what's known as it's not a decreasing policy, but it kind of is, because
kind of works like
yeah,
that.
it's if you start off with say £20,000 over 10 years, that's £200,000. But then the next year it'll become £180,000. Quick maths for me, yeah. I'm still recovering from being a little bit poorly, so just bear with me with the basic maths. And apologies for my dog barking in the background. So it kind of decreases over time, and so it can work out cheaper. But then there can sometimes then be arguments to just say, well, do you just get £200,000 of level life insurance from the start, and actually then once you've got that, you get in touch with a full financial advisor who can then invest it and do things like that and do magic with it. So it's really it's really tricky, but again it really comes to sort of like that thing of, there's a lot of people out there who are really experts at knowing what to do with these things and who have helped lots of people through it, and people can absolutely go at it on their own, but sometimes just sort of reaching out can really sort of give you some good insights into what really works well in the long run.
Yeah, absolutely. So it's likely that or I suppose it's not likely, it's possible that for example, you might have given up work to look after the children, and on divorce you have to go back to work, so you might be wanting to look at some policies that you've never considered before.
Absolutely. Yeah, and it can be quite daunting, and I don't know for definite the statistics or where they're from, but a very close colleague of mine I trust implicitly, he's found a lot of information specifically about a lot of women who are divorcing, and they're maybe in their 40s, 50s, and they're trying really hard to get insurance. They've never had to do this before. It was always kind of there and just done, and they've maybe not done it themselves. And on top of that, they're also going through menopause, which is also sometimes it's actually causing quite a lot of people to be quite cautious about where to go for insurance, because they don't know what they need to say, they don't know what's going to come up about it. And they're often just going straight online and just trying to do it all themselves, which can sometimes work. But again, going for a bit of advice can really sort of like help to find the right options there, because, you know, using it as an example, so like with the menopause, generally for life insurance, critical illness cover, it shouldn't cause any concerns whatsoever. It's not, no one's going to be asking you the question of, are you going through the menopause? You know, that doesn't come up in the applications. It can come up sometimes the treatment though. So if you are taking HRT, if you're taking any anxiety medication, that can come up, but again, it shouldn't really influence what you're able to get. It can sometimes potentially influence income protection though, if you are taking anxiety medication. So again, that's where it's really important to try and get some advice, because the computer option that we have, where it's kind of like black and white forms, will possibly put on potentially a mental health exclusion. Whereas if you get involved and start chatting to people, we can try and avoid those things. So, but no, so no, there's plenty of things that can happen, and people, as I say, from being divorced, you are entering into a world that's, you know, is very different in lots and lots of different areas. But a key example there that you're talking about is people who've maybe given up work to look after children. Now, I say I'm a specialist in protection insurance, but that in itself, that situation has had a knock-on effect to that person's pension and lots of things. And I'm certainly not going to comment on the pension side, but again, talking about things like income protection, you know, if we've already maybe lost some of those really core years of going into our pension, if we are going back into work, then we want to protect that income as much as possible and not risk potentially losing it, and then again having that a potential impact upon our pension when we are getting to that age.
Yeah, absolutely. I might be wrong in saying this, but can you cover pension contributions with income protection?
You don't typically cover pension contributions on a personal policy. If it was a policy through a company, which it needs to be a limited company, and it's also not group income protection, that can cover pension contributions and NI contributions, depending upon how it's set up. But on personal insurance, you wouldn't usually do that. But what happens is, with the income protection, you insure a certain percentage of your gross income.
Yeah.
And the idea is that the money that you would receive each month, it is going to be a little less than what you would usually take home, but it's not meant to be lots less. Just on the basis that, you know, in a sense, the insurers want to be there, they want to make sure that you are receiving the income, but there also needs to be that balance of, at the same point, if you were able to get back to work, trying to encourage you to be able to get back. And it's a very, very fine balance of it all. But out of that money that you do receive, you could choose to obviously still put into a pension, and to probably seek advice as to what best way to use that.
Absolutely. That's good advice, that is. I do see a lot of clients who, my clients tend to be the person who hasn't looked after the money in their relationship, and they're fearful of money in general. And so I think you're right, if you are in that position and you haven't looked after the insurances and so on before, then your best bet is to get hold of somebody like Kathryn, who can help you through the jungle that is, because there are so many decisions to be made. You know, do you have your policies increasing? Do you have them level? How long do you have them for? What age do you take them until? How much cover do you take?
Yeah.
And I think that's one of the things that I wanted just to touch on for a short while now is, how, you know, actually, what should we be talking about covering? How much? What are the important things that we need to be thinking about when it comes to the different types of cover that we're looking at?
Yeah, absolutely. I've just realised as well, I wanted to talk about trusts at some point as well, because that's really relevant as well if people are divorcing. So I'll put that to the side for a second. So in terms of life insurance and things like that, at the very least, we want to have a mortgage covered. If you do have a mortgage in place, let's make sure that is safe, because the last thing you want, life insurance or potentially critical illness wise, is life insurance. You want to make sure that your loved ones are going to be getting that. It's possibly children involved. You want to make sure that if anything happens, that mortgage is paid, they can stay in the family home, and maybe even some more on top, just to provide some extra, so that whoever is going to be helping to raise them is able to have that money to raise them to a level that you are happy, you know, and know that they're going to be really well taken care of. So at the very least, mortgage. When we're looking at that extra, sorry, we're talking about like family protection on top potentially. The general rule of thumb, and there's always outliers, is roughly 3 to 5 times your annual salary. So that's 3 to 5 years worth of your income being put aside to raise your children or potentially to help support your partner while they're adjusting to you no longer being with them. Sorry, so my dog's come back from barking at me from the other room. So we'll be doing that critical illness cover. We'll be looking at the same. And one thing I would suggest as well is that if you look at critical illness cover and you're looking at those kinds of figures and you're thinking, I'm just not sure about the pricing, then why not look at half? You know, instead of just walking away without anything, why not look at half? And then again, you maybe think, well, actually, if I can get at least half the mortgage paid off, then that in itself is a huge weight off my shoulders. You know, the repayments will go down, and with everything that's going on at the moment, anything we can do to sort of save money in the long run is obviously a very, very positive thing. With income protection, I will be saying, and I always go to my clients and I say, I'm going to give you the all singing, all dancing version. So I'm going to do it the highest percentage I can do. I'm going to do it to the largest kind of like retirement age I can go to as well. I'm going to be doing it what's known as the shortest deferred period, which is a very, they call it deferred period, which again is just more jargon to basically say the amount of times you need to wait from when you can't work to when the insurance sort of kicks in and gives you some money to help you. I'll do it so that the payments can potentially pay all the way to when you retire. There's lots of different things and a guaranteed premium as well. But you can work backwards. All those things I mentioned can be changed and tweaked to make sure it goes to a budget that really suits you. And I've just realised as well, I didn't say how long for the life insurance and critical illness cover. Again, you would want it to be going towards the mortgage, like at least the mortgage term. When the children of age of independence, and then that's quite a tricky one at the moment because we always used to think 18, then it's gone to 21, now it's around 25. I've had some people saying 30 to me, and I'm just like, okay, you know, kind of. I was thinking, okay. But you know, things to consider. The other thing as well is potentially state pension age, or the time that you think you'll be retiring. If you were in a position where you have things like inheritance tax, then with stuff like that, you would be wanting to go to what's known as whole of life. So that would be just unending, just to make sure that it is there from whenever that taxation hits. Back to trusts very quickly. I've remembered it's there. So with a lot of insurance policies, they can be known as what is put into trust. And that is a legal document that basically says, if we say life insurance, just to try and make it as easy as possible, critical illness possibly in it as well, but we'll just do say life insurance. So basically, I've put a policy live, it's in trust to say, right, when something happens to me, I want it to pay to my husband. I'm also giving my husband permission to own this policy with me. And so if something happens to me, he can just say, yeah, I want to pay it to myself. That's all fine. That would be the usual way that a couple would set up a trust. But, through a divorce, it can sometimes get a bit messy and it's a bit tricky because as the plan holder, let's say I divorce my husband, I can't change, in a lot of insurers, I can't change that trust without his permission. So we then sometimes have the difficulty of a debate to say, look, we really do need to change this because, you know, I don't want you to have control of it. I now want my sister to control it and I want it to go to my children. Everybody might want to be doing that. That's fine. It might be that you keep it in place as it is because, you know, you might want if the children would go to live with the ex-husband, maybe you do want him to have the money. That's fine. Sometimes though, in some situations, people might actively choose to cancel their original policy and set up a new one, set up a new trust, just because of, it depends on how intense the divorce is going. But again, as I said before, I wouldn't advocate cancelling a policy without really getting some support as to what is the right option.
Yeah, absolutely, because if the policy would have been useful to you and you've cancelled it, you lose that opportunity to keep it with the potentially lower premiums and potentially better health if you're in a if you've had any health issues more recently, which can occur during divorce, unfortunately, because it is a stressful old time.
Key thing, I was just going to say, a really key thing as well with these protection insurances is for people to be aware of what's known as value-added benefits. Now, these are extras that are now available with these insurances. They're not a paid-for extra. There's something that insurers are just offering now, and quite a few of them are offering them to all of their clients. It doesn't matter when you set the policy up. So it's always worthwhile asking, checking. But with those, you can have things like mental health support and counselling support. You can have, it can be things like, you know, getting you personalized nutrition plans, personalized exercise regimes, things like that. Some of them even offer things like remote GP appointments, like 24 hours a day, 7 days a week, video consultations with your GP.
Wow.
Anywhere from wherever you are in the world. You know, I've used them before when I was on holiday in Malta for one of my children. They're absolutely phenomenal. So again, just keep an eye out for stuff like that, because there's lots of support in lots of different areas, and they could really be quite valuable, especially if you are going through a divorce.
Absolutely. And divorce isn't the only time that we should be reviewing protection policies, is it? Because
Yeah.
I think there's a general um, thing that happens where we'll move house, we'll set up our insurances with somebody, and then we'll stick them in a filing cabinet. We'll forget all about them,
Yeah.
and I have known people to accidentally cancel direct debits for life insurance policies because they kind of go, well, I can't think what I'm paying legal and general for, or
Yeah.
whatever other insurance policy. So yeah, how often should we be reviewing these things?
I mean, in an ideal world, just like you would do with pensions or investments or anything like that, ideally have a look every year at it. That's not to say jump from policy to policy every year, but just make sure it still suits you. So one of the things that we do is we reach out to all of our clients and we'll send like some contacts to them. We'll phone them if we can even. Sorry about that. Just lost my words for a second. Or we'll email them and we'll say, right, has anything changed? You know, have you got a new mortgage? Or has your mortgage significantly reduced for some reason? You know, could you potentially, not saying we should do necessarily, but you might want to reduce, you know, the amount of insurance that you have. You might want to keep it. There's arguments for both. Have you stopped smoking? That's a really big one, because in the UK, with most insurers, if you are a smoker, so that's, and it's important to say that with a lot of insurers, that's any form of nicotine at all. So even gum, even patches can be classed as a smoker. Your premiums are roughly going to be double that of a non-smoker. So if you have stopped smoking for at least 12 months with quite a few insurers, there's the potential to have your premiums. And so that's really important to be aware of. You know, have you changed your job? Has your income changed? Have you got divorced? You know, that's a really big one as well, because you do tend to find that when people are married, they tend to have lots of joints, entwined financial things. And when you're getting divorced, you need that picking apart. And it's quite tricky, because from like an advice point of view, so if, for me and my regulators, in a sense, they would say to me, if someone's got a mortgage, right, you need to do them joint cover. But there's this growing argument now to say, well, should we be doing joint cover? Should it be single? Because actually, none of us know what is going to happen in the future. None of us go into a marriage thinking, yeah, we might get divorced at some point, or else we wouldn't be going into the marriage. So it is sometimes, you know, and that might also be a bit of a tricky thing to go, well, actually, should we get single just in case me and you get divorced? Because that in itself is quite a thing to face. But it is worth sometimes really considering just a bit extra. And it's certainly not my specialism or anything like that, but there are things, there are definite areas of financial abuse, and insurances will come into things like that. And it's just making sure that you are safe from every direction in terms of the financial side of things. But definitely, you know, the times that you need life insurance are when there's a mortgage, someone that will inherit the mortgage. So I say that's usually children. If there's things like inheritance tax, we want to make sure that, again, we've tried to do as much as possible to help people to make sure that they can access the estate. Critical illness cover, that's all about you. You know, a big thing of it about you, or potentially, and I know we spoke about this slightly earlier, but it might be that you get something like critical illness cover and you maybe not thinking about it for you. Maybe you're thinking, I'm going to use this to pay for a carer to be able to come in and, one, help me, but also someone to come in and help my children while I'm not going to be in the most active, and then that'll give me more chance to possibly get better quicker, things like that. And income protection, for me, anybody who's earning an income, to me, should be looking at income protection. It's just too valuable to miss up the opportunity.
Yeah, absolutely agree with you there. I think especially when you're on your own, if you're a single parent, for example, and it all becomes on you. So
Yeah.
you've got the children for X amount of the time, but the responsibility is on you you may have some maintenance coming in as well, but what happens if that money that comes to you doesn't come to you and you can't work? Then you're solely responsible for it. So I think you're absolutely right. I think income protection is, as we both very sadly said earlier, it is one of our favourite insurances, because it's just it does the job, and it's something you're paying for that you will benefit from if you ever need it. And if you don't ever need it, to be brutally honest, if you've paid that money and never have to claim off it, that's a really good thing in my mind.
Exactly. It is quite tricky, because sometimes people say to me, well, I'm not going to get anything at the end. And you kind of want to say, but the positive is that you've not been ill for all this time. And there's a really good sort of like way of describing it that I've heard plenty of people say, and I'm going to steal it and say it here. And one of the things is, like with income protection, is say, right, if there was a cash machine on your front lawn and it gave you in cash every single month, let's say £1,500, and you knew on the first Friday every month, 9 o'clock, that money was going to fire out, and that was your money for the entire month, what would you do to guard it and protect it so your neighbours don't get it? We'd all be out there. We'd be sort of like, we'd have our weapons and we'd have everything else. We'd have a big, metal thing with locks around it to make sure. We'd all be scrunching into it to make sure all the money came straight into our hands and run into the house. And ultimately, that cash machine is our bodies. We are completely reliant upon our bodies to be able to work and to be able to achieve what we do. And there's plenty of ways that we can adapt and still carry on working in a lot of situations. But I think sometimes when we think of it as an actual thing and what we would do to protect that, then try and sort of think, well, actually, no, that's me. That can sometimes just help to sort of really hit home how it isn't something to ignore.
Absolutely. No, that's a really good way of thinking about it. I've never heard of that before, all these years. But
I'll say it was just me then. I'll just say it was me. It was all me.
It's brilliant. No, I really like that. I think the thing is with all these things, they're about giving you peace of mind, and they're about, if something goes wrong, you can concentrate on getting better. Certainly with income protection and critical illness cover, it means that the focus of you can be away from the financial stress and focusing on you getting well. And I don't know what the statistics are anymore, but I used to. And there's really good positive statistics around people who have that financial protection in place and have that support and background, knowing that they can concentrate on getting better and not have to worry about the bills. So I think it is something that's really important that we should all think about for our futures. We're coming to the end of our time together, sadly, Kathryn. Is there anything that doesn't it? Is there anything that I should have asked you but I haven't?
I'm not sure. I think we've covered over a lot of things. I mean, this again, with these insurances, it's so intense that we could spend hours talking about all the complexity, and there'd be so much jargon and everything like that. But I think it comes down to the key thing that you were saying. Make sure that you're reviewing what's there. Make sure you're getting your hands on all of that. Go through the bills and see, right, that's an insurance company there. That money's going out to that. What was it? What does that mean? Was I covered by that? Was my ex-partner covered by that? Should they still have that in place? Are they going to potentially try and cancel it because of XYZ? And there's really, really good arguments for making sure that some insurances are still in place, especially when children are involved, because no matter what, when anything like this happens, the children are, they need to be safe and secure, and they're already going through a huge amount of change anyway. And I think that insurance can be something that it doesn't have to be stressful to set it up. I have to say, it can go quite smoothly. And then at the end of it, it is done, like you say, it's a piece of paper in the drawer. Right now, a lot of the times, a PDF on your computer, but it's there. And then you just know that's there, that's security. And it's surprising how many people feel like a huge weight has been lifted off them just because they know that that's there. But hopefully this has helped people to understand what to look out for and what to be considering going forward. And I have my fingers crossed for anybody who is listening to this and is going through something like a divorce. I hope that everything is going as okay as possible, and everyone just take care of themselves, really.
Oh, that's really lovely. Thank you so much for joining me. I think that's been an incredibly useful episode, and will help a lot of our listeners to get their heads around what they should be looking out for and what they should be considering. I'm sure there'll be people listening who want to get in touch with you and work with you. How can they do that?
Well, I'm kind of a bit here, there, and everywhere. I'm on quite a bit of social media. So the main place I'm on is things like Twitter. So I'm, it's my name, Kathryn_Cura. I think you've said that you'll possibly put a link up somewhere, so you'll see me there. It's a random picture of my dog Fudge, who's obviously been a little bit on here. It's things about my kids, things about me just in general, as well as insurance-y type stuff. I do have a website, Cura Insurance, and there's also a podcast as well that people might find useful, which is the Practical Protection Podcast. There is a website again for that, but with that one, it gives, for people who were potentially trying to set up insurance, if they have had any health changes, lots of episodes in there to describe what you would need to know to be able to apply for the insurance, what you might find at the end of it, and hopefully people do find that interesting for their journeys going forward.
Fantastic. I can say that your podcast has certainly been very helpful to me. I've listened to a few episodes over the last year or two. Yes, we will put your contact details and all your links in the show notes so that people can get in touch with you. Thank you for joining me, and thank you all for listening or watching, depending on how you're accessing this podcast. If you have enjoyed our conversation, it would be fantastic if you could give us a lovely 5-star rating. And if you do have any ideas of people that you would like us to interview, then please do get in touch. Again, my details are in the show notes, and we will see you soon.